back to Money Movers. Well, it was a beat for NVIDIA, but the street was perhaps looking for a little bit more. Seema Modi's been following the price action in the stock this morning. Seema, break it down for us.
Well, Wilfred, a strong report overall, but if you were to pick out some concerning signs, one is the size of NVIDIA's earnings beats, which are coming down 6% in the second quarter compared to the 29% back in 2023. The revenue beat also narrowing over the past few quarters, something that analysts have been talking about. Now, on the earnings call last night, NVIDIA did acknowledge that operating expenses are going up as its next generation graphics processing unit Blackwell ships out in the fourth quarter. Its biggest business, data center, saw record growth, 45% tied to cloud service providers. Gaming sales were up 16% year over year, quieting concerns about heightened competition. And there's an active debate amongst Wall Street folks about gross margins. Bernstein's Stacey Rascon writing that the one smudge on this report was end of the year gross margin outlook. The 75.7% in the second quarter was a quarter-on-quarter decline. On the earnings call, NVIDIA CEO really stuck to his big picture message, saying if you just look at the world's cloud service providers, the amount of GPU capacity they have available is basically none because they're either being deployed internally for accelerating their own workloads and data processing. So no demand issue here, guys. In fact, Huang added that supply is improving going into 2025. Deirdre.
Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with the most recent chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So as we can see here, the earnings reaction has now been seen. This prior news video that we just watched here did describe some quote unquote warning signs that were present in NVIDIA's quarterly earnings for the second quarter. Overall, I have a hard time agreeing with that interpretation of what those results actually showed. Even Jensen is reported as saying that he was surprised by the market's reaction to the report. I can just sort of picture him with his hands in the air and a confused look on his face, thinking, what is it exactly that you people want? Like, what would you like us to give you? Is anything going to be good enough? So it is a bit confusing to see that share prices would be trading under pressure after the release. The way that things opened today, things were not quite as bad as they looked like they might be last night. Overall, last night, the aftermarket activity was sort of pointing to an open closer to right around the 117 mark. As we can see, the current price low is coming in at roughly 119.30. So we weren't quite as bad as things might have looked. We really didn't get the retracement to the downside that looked like might be coming. So currently what we have to do, at least on a short-term basis, is sort of reassess this price chart, look at a new trend wave, given that share prices have now broken below the exponential moving average cluster here. And it looks like we could possibly be in for a period of weakness here, as long as that continues, at least. I mean, if the share price is trading below the moving averages, the expectation here would be for signs of negative momentum. So what we're seeing here currently is a somewhat minimal price movement to the downside, and we are starting to stabilize a bit here. So it does not quite look as though we will be seeing lows coming in at 112. We can look at how the rest of the market is currently responding to these numbers and the broader trend movements within the market. But overall to the downside, it does look like things could definitely be contained by the 38.2% Fibonacci retracement level that's found using the prior lows from 90.69 and then extending to the near-term highs coming in at 131.26. So the way that things currently look, it does appear as though the dust has kind of settled here a bit. Further downside here is looking less and less likely. We can try to look for weaknesses in this report if we'd like, but 156% gains in operating income, a $50 billion share buyback, 122% increase in revenue growth. I mean, the numbers are astonishing. They're truly incredible given the size of NVIDIA and given the comps that were present for this company. It was an extremely high bar that they needed to clear. And it just, it's a really good lesson for the market as a whole, because, there are many instances where companies will beat earnings, sort of the trailing numbers possibly, and then still fall in share price values. So, it's all about expectation and whether or not, the expectation is really higher than the expectation, if you know what I mean. Like, we had a certain expectation for what the quarter would produce. And then, but it looks as though this wasn't really the expectation. The expectation was that, it's NVIDIA, so they must beat earnings and things must be surprising, astronomically surprising. But the question is, how long can that continue? These are very difficult comps for the company to overcome. So, as things currently stand, I can understand why Jensen would be a bit surprised at the market reaction here. And the real question here is whether or not prices will continue to trend lower. Things are not looking as bad currently as they did last night. The aftermarket trading activity did suggest a much lower open, and we didn't really see that. So, as things currently stand, if we were looking to continue to buy on dips, and if we did see some further weakness here, one level that can be watched comes in right around 115.90, because as I said, this would mark the 38.2% fib retracement of this prior ascending move. And there is still some negative momentum that is present for this stock because we have fallen below the exponential moving averages. And if we look at the indicator reading itself, we can see that the prior uptrend in share price momentum has been broken, and a newer downtrend in share price momentum has started to develop. What we can say here is that we're starting to approach oversold territory. We sort of crossed into it a bit here, as you can see. We did cross below the 30 mark in the relative strength index. This is a short-term time frame that we're looking at here. This is the 30-minute price chart. But the reason that I wanted to look at these shorter-term time frames is mostly due to the fact that there really isn't much of a historical support formation here within this most recent trend movement higher. It has been sort of a straight shot above in the upward direction, and then we did sort of flatten out here at this prior 78.6% fib level, right around this 131.26 area. So, as things currently stand, there really isn't much historical support here. And then in addition to that, we've already broken below the exponential moving averages. So there really isn't much technical basis to be used here for a trade, and that does make things a little bit complicated if we're looking to buy this stock on a dip. So as I said, there is still some negative momentum that is present here. It's not clear that the dust has completely settled. This is a bit of a muted reaction relative to what was being seen last night. So if we do continue to see a bit of a drift lower, and we do see share prices move into roughly 115.60 to 115.90. I do think that would be an acceptable region to start buying on a dip because, as I said, the report was very strong, and it's very difficult to believe that the market is just going to continue selling off massively in the face of those numbers. So here's the current market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.